This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. It's Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And do we have a very important show for you today, as all of our programs are. Because when we're talking about money, we'll give you the good news and the bad news. So the show is about our new president, President Donald Trump. Not so new, but 1 year now. And the question is, he's famous for being on The Apprentice, but also what is his viewpoint on money? Is he going to continue on with his Keynesian or loose money policy, or does he want sound money? And regardless of which position he takes, the question is, what are you going to do about it? So today we have an expert on Trump's point of view, but more importantly, it's not Trump's point of view, but our job is to maybe influence your point of view on the subject of money. And the question is, is President Donald Trump going to push the dollar back onto the gold standard, which I think is probably impossible. But if he did, is that what he's doing, or is he going to go Keynesian? And Keynesian very simply means print money in the jargon of the money world. So it's a very important subject today, because whichever way President Trump goes, he's going to affect all of us. And the real thing, nutting it out, as you know, at Rich Dad, we keep it really, really simple. As we said in Rich Dad, Poor Dad 20 years ago, savers are losers. And everybody I talk to says, well, you got to save money. Now, why the heck would you save money if America, the U.S. dollar is the reserve currency of the world, is printing it? Why would you save something that's being printed? And in certain countries like Japan and I think Switzerland, they have negative interest rates. It means they don't want your money. And yet mommy and daddy get up and say, oh, you should save money, Benjamin Franklin, a penny saved is a penny earned. Well, I hate to tell you this today, that might not be good advice. So the question is, what is President Trump going to do? What is he going to attempt to do? But more importantly, what are you going to do? So we have a very important guest today, Dr. Judy Shelton. Kim, what do you want to say?
Well, this is going to be fascinating, and we've asked Judy, and specifically for Robert and myself, to keep it very simple. But Dr. Judy Shelton, she's an economist with expertise in global finance and monetary issues. She is co-director, I love the name, she is co-director of the Sound Money Project at Atlas Network. So we're going to be talking with her about what she sees under the Trump administration and what she might do or predict would be best. She's the author of Fixing the Dollar Now, Why U.S. Money Lost Its Integrity and How We Can Restore It. She also is the author of The Coming Soviet Crash. She predicted the economic collapse of the Soviet Union in 1989, 2 years before it actually happened. So she knows a thing or two about international money policy.
So she was standing up on stage talking about how she's been part of President Trump's transition team to bring sound money, possibly gold-backed dollar or gold-backed bonds, into the monetary system. And I sat there and I said, Judy Shelton, you may be a very smart person, but you're also a dreamer. I mean, there's too much money being made via stupidity, incompetence, and greed. I sat there listening. She wants to change the system. But that's also why we have our other guest, is a Rich Dad advisor, Tom Wheelwright, who's also one of these A students, who understands the tax side, because the tax change just came out under President Trump. What Tom is going to tell you is that the tax law is written for the rich. It's not written for the poor and middle class. So the question for you, again, is not what they're going to do, not what the Fed's going to do or whatever it's going to do, is what can you do? And the question is, what happens if you're still drinking the Kool-Aid and believing that saving money is smart when saving money is for losers? So Dr. Judy, you're an anomaly because, you did your postgraduate studies at Stanford University, which is as left as it can get. And yet you're one of these elite economists who was talking about sound money. I mean, how does that too, and how did you come onto this policy? And what is your background, and what are your thoughts on the future? The whole thing in 2 minutes will help. Anyway, welcome to the program, Doctor.
Welcome.
Well, thank you, and how nice of you to have me on. It's a great pleasure. I feel honored, and I really appreciate the chance to talk with someone I admire so much. I certainly, it's on my Kindle right now, your Midas Touch
Great.
book, and I really like that you saw early on the value of the entrepreneurial spirit and outlook that President Trump brings to the economic agenda. I'll just say very quickly, I'm so excited that we have a tax reform legislative bill that is looking stronger and stronger. I think it's a huge victory. I agree with my friend Larry Kudlow that this will be extremely helpful from a business competitiveness point of view. But let me go to my topic on sound money and why I was drawn to President Trump when he was a candidate. You know, he actually is quite sophisticated in the way he sees the role of money in a free enterprise system. He often has said that the low interest rates, we know artificially low, engineered by the Federal Reserve, as a developer, he was happy. He said, they want to give me free money. But even then, he said, I feel sorry because the people who are just saving money are getting creamed because they're getting nothing. And so you're right in acknowledging that. But then I think we need to go to the question of why do we let a central bank, our Federal Reserve, make suckers out of savers? Saving is a virtue. It's a fundamental virtue in a capitalist free market economy. So that's why I care about this issue.
And Judy, what do you see the role of the Fed being, and what has it become?
Well, it was originally set up basically to provide what they called an elastic currency. And we're going back to 1913, and banks would sometimes find that they would run out of cash when farmers were borrowing because they had to buy seeds and equipment and everything they needed to produce, and then they would be flooded with cash after the harvest. And the idea was if you had a central bank that the other banks could just borrow cash from when they needed it to smooth out the cycle of people withdrawing money or depositing money, that's would be their function. And when the Fed was first created, we were on a gold standard. So nobody thought about monetary policy. There was no such thing. No one was manipulating the value of money. Money was determined by its convertibility into gold. It was when the Fed in the 30s started getting more active in trying to decide how they could stimulate business through interest rates, and it's progressed from there. I mean, at least we had a tie to gold and the dollar up through 1971. But I would say today the Fed has become the tail wagging the dog. Everyone is more fixated on what someone who serves on the Monetary Policy Committee of the Fed might say on television. They're waiting to see if Janet Yellen raises an eyebrow during a press conference to decide where to invest. And the danger is that they have really distorted investment because they are manipulating interest rates, and you need the interest rate to tell people where is the best place to invest productively.
So, Judy, this whole thing, it's all related. It's not like one thing is unattached and all this. But let's get it down to listeners of my level. Again, I said savers are losers. Now, why would the Fed keep interest rates so low and basically punish the working class saver? Why are they doing that? See, my opinion is that the whole system, and Tom Wheelwright and I always talk about, the whole system is rigged for the rich to get richer. And the Fed is almost a puppet of the rich, the guys on Wall Street, the banks, and the big corporations. But what benefit does it do, in my opinion, the Fed to screw the working class?
I agree with you, Robert. I think that the Federal Reserve is too fixated on the financial markets. The idea, I mean, these are not evil people. They're actually, I think Janet Yellen is quite a nice person, and I'm sure they all are trying to do what they think is helpful. And the idea was that if you make interest rates extremely low, that companies will find it impossible to resist, and they will borrow.
Right.
And they will borrow so that they can buy plant and equipment and expand their productive capacity. And in doing so, they'll have to hire new workers. And as those new workers are being offered jobs, that will cause wages to go up. And their only fear in this whole model was that, then the workers will be making so much money that then we might have inflation. So after a few years of working this model with these extremely low rates and not seeing inflation, it finally has become very apparent that the model wasn't working. That is, if people really were getting higher wages and then turning around and buying more household goods, you would have seen the consumer price index go up, and it didn't. That should have told the people at the Fed that the model had a problem. And the problem, it turns out, is that companies borrowed the money, but instead of expanding productive capabilities, they bought back their own shares.
Correct.
Who did that benefit? And you have investors, the people who can borrow at 0 or 1%, they were then increasing their portfolios. They were already rich, but they could borrow for 1% and put it in the market and make 10 or 12. And big government found it really convenient. So instead of helping the middle class or working people, the benefits really flowed to big business, big government, and big investors.
So once again, it's Robert Kiyosaki, the Rich Dad Radio Show. We have two guests today. We have Dr. Judy Shelton. She was on President Trump's transition on economic affairs. And also Tom Wheelwright, because what has just happened is the new tax bill has come out, or Tax Reform Act has come out. Tom was also was working in Washington when the 86 Tax Reform Act came out, which again made the rich richer, but screwed the poor and middle class. And it has been the point of view of the Rich Dad radio program or the Rich Dad company for all these years. The whole system is rigged for the rich, not the poor and middle class, which is why we have financial education. So when we come back, we'll be hearing from Tom, as well as Dr. Shelton, Judy Shelton, on what you can do, given that the whole system, in my opinion, is rigged for the rich. We'll be right back.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Do you own an LLC or LP? Are you aware of the new rules? The IRS has mandated new audit rules that require every LLC operating agreement and LP limited partnership agreement be amended. This dramatic requirement has never before been experienced, and changes must be made by December 31st. Corporate Direct, owned by Rich Dad advisor Garrett Sutton, can guide you through these new rules. Call 800-600-1760. That's 800-600-1760. Or visit corporatedirect.com. Contact Corporate Direct today to stay in IRS compliance.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
We have two great guests today. We have Dr. Judy Shelton. She was on President Trump's transition team, advising him on how to get the dollar back to being legitimate and sound. And also Tom Wheelwright, who's a Rich Dad advisor, author of Tax-Free Wealth, who is a person that keeps me focused on taxes, because money and taxes go hand in hand. It's like the fingers to the glove. So you can listen to the Rich Dad radio program anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. And since all of us, and even those of you who don't work, are affected by the subject of money and taxes, like it or not, which goes back to my ongoing rant why don't we have financial education in schools? They say they teach us to save money, and yet people still say, oh, go to school, save money, get a job, work hard, invest in the stock market. And I just go a little wacky. How do you understand how the rich are getting richer and paying less taxes? Because as we've been saying at Rich Dad, the whole system is rigged for the rich, not the poor and middle class. And I'm not condoning it. I'm just giving you my observation. Comments, Kim?
Well, we've got two very special guests. We have Dr. Judy Shelton. She's an economist. Her expertise is in global finance and monetary issues. She was part of Trump's transition team, and she is the co-director of the Sound Money Project, whose mission is, and this is very basic, sounds like a novel idea, mission is to promote the principle of sound money and raise awareness of what they see as inherent problems in the current monetary system. Our other guest is Tom Wheelwright. He's a Rich Dad advisor on taxes and one of the smartest people we know in the world of taxes. So, Tom, you had a question for Dr. Judy Shelton.
Right. So in the previous segment, Dr. Shelton, you mentioned that what happened with all the money that corporations were able to get, and we saw Apple do this, we saw a lot of big companies do this. They took the money and what they did was they bought back their stock instead of expanding their capacity. And so it never really flowed to the workers. One of the criticisms of the new tax bill, which, by the way, I don't share, but one of the criticisms of the new tax bill is that the corporations will do the same thing with that money. So I'm curious as to your take on that. Do you think that we run the same risk with the reduction in the corporate tax rate?
I think there's always a risk, but I think in the case of trying to get companies to expand production by offering this very cheap money that they could borrow, that was so artificial. I mean, that's really engineering. And I think the Fed's attempt to engineer doesn't quite work because people don't invest just because they can get cheap money. They invest when they see a fantastic opportunity. So the Fed maybe was naive in a way in thinking that if we make the money cheap, then they're going to do just what we want, and that will create jobs. It's different on tax reform. Again, yes, there could be a risk. It could be that companies take the tax savings and bank it in ways that aren't creating new jobs. But I don't think that will happen. I think it's more fundamental. I think it's more structural. I think that it makes the U.S. More competitive globally. And I think that to me is a more promising way to tell private enterprise that we support you, not with artificial loans at a fake rate, but by fundamentally allowing you to compete, to have more money to do what you want to do, to be more productive, to get bigger and better, to hire more people, to make it more rewarding, to produce a better product. I think that it's structural, and it almost has a moral support aspect for business, and so I think this could be more successful in giving business the confidence to make those investments for the longer term that do end up increasing employment and make for a more dynamic business recovery and for better economic growth.
So Dr. Shelton, if I could ask you this question, because what I see happening with this tax cut is that means more overseas investors from like the European Union, Japan, and China are rushing into the American stock market. And there's some positive and negative, but more and more money is pouring into the U.S. markets, stock market, because they see this as a boon for the stock market more than the worker. And again, that's why I'm saying, why don't we have financial education? Because while in theory it's a good idea, my real opinion, you said it, is most economists cannot predict the madness of crowds. And they're not rushing in because they're going to produce more jobs. They're rushing in to play the stock market, to play the U.S. economy, which makes the U.S. dollar stronger. And when the U.S. dollar gets stronger, it actually hurts our exports. I mean, is that possible? Or am I smoking something?
Well, this is one of those, there are some good and bad aspects to it. And in a way, if you think back what happened in the 80s with Reagan, foreign investment came pouring into U.S. markets. Is it just chasing the higher potential value of the dollar? Yes, it could be, because if our Federal Reserve is going to be raising interest rates before the European Central Bank or the Bank of Japan starts raising rates, then it could be, that sort of cynical currency play where they want to invest and make money, because when they take their money back out, it'll go a lot further back in the home countries if the dollar appreciates. So it could be that they're chasing interest rate policy. But I also think that there is a chance that they see a better tax environment, better regulatory environment. For sure, we're getting that under the Trump administration, that companies in the United States really can be more profitable.
Well,
and so it could be that they want to invest just to make money in the market because it's reflecting higher value for those corporate shares.
So let me summarize this, Dr. Shelton. What you're saying then is, for years now, the Fed has been playing with interest rates, and you're saying President Trump is playing with tax rates. Is that what you're saying?
No, I'm saying he's using real bullets. Tax reform and regulatory reform really help American companies perform better.
I understand that.
Real gains.
I understand that. What I'm saying that, are you saying that there's a big difference between tax reform and printing money?
Oh, I think huge. Printing money is just totally artificial. Tax reform is truly beneficial.
Thank you.
It allows a company to operate.
Thank you. So,
well, and if you look at this, tax bill, the corporate tax reform is permanent. So, you're not fluctuating like you are interest rates. You've got a permanent structure. What I see is, I actually see you've got companies overseas that are operating at 30 plus percent in their corporate tax rates. I see companies thinking that maybe we ought to have an operation in the U.S. like BMW does, like Mercedes does. Maybe we see an Airbus with operations in the U.S. Maybe we see some other operations moving from overseas. So not just the money coming in. What I see is the potential of actually bringing the manufacturing into the U.S. And I think that's the point behind the corporate tax rate. And to me, I see that the U.S. now as a tax haven. At 20%, we qualify as a tax haven. We're not that much higher than Ireland's 12% at 20%. So we really are an incentive for not just moving money here, but actually moving jobs and actually moving manufacturing here.
So Tom, let me play devil's advocate, because we had David Stockman on, and he says that's a bunch of crock. But anyway, everybody's entitled to their opinion. But my question to you is this.
David Stockman said U.S. businesses would not move back here for the tax rate because they're too entrenched where they are, and it's cheap, cheap labor.
I think that's the issue.
Tom, we're not. Look, you and I are not going to move any companies overseas or back. But you and I will pay taxes.
Right.
So you and I were talking yesterday about you love this tax bill for Kim and Robert.
Right.
Why do you love this tax bill for Kim and Robert? What about the employees of Rich Dad?
Well, all taxes are an incentive, right? That's what they are. They're an incentive. And what this tax bill does is provide even more incentives for business owners and professional investors.
What about employees?
Employees are not the beneficiaries of this tax bill.
What about the white working class who elected Trump?
They are. There's a level of income that is particularly benefited, and it's a level under 100,000. Okay, so those people are going to get a lot of benefit out of this tax bill. Typically, your $75,000 family earner, which is the white working class. Okay, I mean it's not just whites, but it's the working class. The people in that 100,000 to 400,000, the kind of the higher income wage earner, they get hammered.
Right,
under this tax law.
But Tom, we had David Stockman on. He says the poor will get the benefits of 2 cappuccinos and a banana. That's
from
about
Starbucks.
All
Well, they're not.
He was extremely cynical about the poor and middle class. And what you're saying now, it's the high income, like what we call the S quadrant: doctors, lawyers, accountants, The high-income guys making over $100,000 will get hammered. So again,
that's my analysis. Okay,
yeah, I know.
I mean, it's just the way I've run the numbers. Those are the people that get really. If there's anybody paying more tax, and most people are paying less tax under this bill, but if there's somebody paying more tax, it's probably in that range. The people down in that $50,000 to $100,000 are probably paying less. The people under $50,000 aren't paying very much tax anyway.
So anyway, when we come back, we'll be going more into what can you do. Again, the whole position of the Rich Dad Company was since 1913, when the Fed was created and the IRS was created with the passage of the 16th Amendment. The game of money has always been rigged for the rich, but our school system does not teach that. So when we come back, we'll be going more into what can you do, because you and I are not going to change any tax laws or those things, but we can do things for ourselves.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Robert Kiyosaki's Rich Dad Advisors have a great gift for you. Visit richdadadvisors.com and receive 5 free reports on business and investing success. 5 free reports that can help you right now. And while there, check out the Author's Choice audio series. Audio is a great way to learn. And for as little as 99 cents, you can download key chapters from all the Rich Dad Advisor books. You can listen to The Myths and Magic of Real Estate Investing, 7 Steps to Limited Liability, The 4 Pillars of Investing, Team Code of Honor, or The Psychology of Debt, among other great audios. For pennies, you can power up your skills for getting out of the rat race. So please visit richdadadvisors.com for your 5 free reports and your powerful and affordable audio chapters. That's richdadadvisors.com for great information that can help you right now.
Your financial education continues. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Our guests today are Dr. Judy Shelton. She is the author of Fixing the Dollar, Why the U.S. Lost Its Integrity and How We Can Restore It. Came out in 2011. Number 2 book is The Coming Soviet Crash, which happened 2 years after her book came out in 1989. The Money Meltdown, 1994, and A Guide to Sound Money came out in 2010. I love this woman. She is very bright. She's politically, on the side of sound money, which I don't think too many people even know what that means. And our other guest is Tom Wheelwright, because I'll say it again, in 1913, the Federal Reserve Bank was created, and then also was the 16th Amendment for taxes, which led to the IRS. And the average person has no idea what the Fed is or what to do about taxes. And that's why we're the Rich Dad Radio Show, so you can listen to some of the points of view out there. So once again, you can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com. We archive them because repetition is how you learn more. Listen to this program again. You'll hear even more. But more importantly, play this program for friends, family, and business associates and discuss it, because money, like it or not, and taxes affects all of our lives. Comments, Kim?
So, Judy, I have a question, because I thought this was a really interesting comment you made. Because the media keeps saying that Trump is a protectionist. He's against free trade. He's trying to cut off our free trade from all these different countries. And your dealings with the campaign and the transition, you say that's not so.
President Trump is absolutely for free trade, and I give him so much credit for getting out there on the campaign trail and saying that if countries can manipulate their currencies to gain an export advantage, that is against the rules. Now, the problem is today we don't have rules. We used to have a stable international monetary system. Nothing like that exists today. It's not just a non-system, it's an anti-system. So countries can do whatever they want with their currencies. Central banks can do or say anything, and it moves exchange rates by huge amounts. And it really distorts investment, and it really does work against manufacturers. what I liked about President Trump bringing this up, currency manipulation, as a candidate, is it has been so unfair to suggest that U.S. workers for manufacturing companies, particularly auto companies, if they were to say, why is it that we produce a good quality product, and then it turns out that China can manipulate their currency downward, or Japan, and suddenly we don't have the best product out there for the best price. We may have the best product, but the price was switched around because of the rate between the dollar and the yen, or the dollar and the yuan. And what I like is President Trump saying everyone should play on a level field. It has to be fair. And he called countries out on this. And he's saying it's not right. And I think by doing so, he is restoring the principles and even the logic and the morality of free trade. If you're going to have free trade, which is great, it raises standards of living for everyone, but you have to have the same monetary rules. You have to have a stable monetary foundation, or else countries can cheat. And then that causes blowback against the whole concept of free trade, because it punishes workers unfairly. Particularly the U.S. has suffered because of the currency manipulation of other countries.
But Dr. Judy, doesn't the U.S. also manipulate its currency?
Well, the truth is central banks are the biggest currency manipulators. Yes. Correct. Yes, of course.
When we print money, aren't we?
When we launched it, yes. When we launched QE, the finance minister of Brazil said that the United States was starting currency wars. And Robert, here's what we said in our defense. Our Federal Reserve said, well, no, that was just an unintended consequence. We weren't trying to cheapen the dollar to help exporters. That just happened. Well, that really didn't that didn't really help those other countries. So yes, is it true? Yes, and this is another reason for me. By bringing up currency manipulation, President Trump is starting to approach the big elephant in the room, which is, what is the role of central banks in causing these very destabilizing exchange rate movements? Because the truth is they are the ones that do cause it. It's just we're more subtle about it, versus China every day goes into the exchange market and says, here is the rate we will allow today. So they're very blatant about manipulating. We do it, but it's just more subtle by saying we're still on a track to raise rates next month. Or this month now.
Do you actually believe them?
What you mean, that whether the Fed will raise rates?
I agree with you. What most people don't know, the United States actually fought the concept of central bank for years. This is the third central bank, and what I'm saying, the reason Tom Wheelwright, my personal tax advisor, is on the program is because in 1913 the Fed was created, and the IRS was technically created with the passage of the 16th Amendment. So what happened? It becomes debt and taxes once the dollar came off the gold standard. So the dollar became debt after 1971, and the taxpayer has to pay taxes. The consequence of all of this is that the U.S. borrows so much money, and this coming Friday we might have a government shutdown because the United States is so far in debt, yet people like Kim and I are celebrating because we're going to get a tax break. Tom, what's your comments on that?
The tax law now is a series of incentives. That's primarily what it is, and that's how the government uses it, just like the Federal Reserve uses, money and the monetary policy in order to manipulate the economy. So, they do go hand in hand, Robert, just like you suggest.
So Dr. Shelton, it was a great distinction you brought up, is the Fed does its job by manipulating, let's say, interest rates and quantitative easing, which is, my opinion, printing money. And what President Trump is trying to do is inspire trade via reducing tax rates. Is that what you're saying?
I think that he is reducing tax rates. He's reducing regulatory burden on companies. And when you consider that, much of my career was spent analyzing the Soviet Union and why that country went bankrupt, and you would think that the lesson would be that central planning doesn't work. And so it's surprising to me that we still have very complex and burdensome regulatory structures imposed on the private sector in our country, and that we have this very complicated and expensive tax system. I think that we're trying to repeal back some of the burden and unleash entrepreneurial incentive and help the private sector do what it's cut out to do and can only do. Government can't create. Government isn't dynamic. Government can be a referee, but they better be fair about it, and they better keep a light touch and allow the private sector to be productive and unleash it.
Amen. So let me ask this question on this. You so bold. I was at the New Orleans Investment Conference. I thought you were this academic who was Keynesian, which is printing money. But when you talked about putting the dollar back on the gold standard, I said, boy, that takes guts to say that. Or at least the U.S. could put out a bond denominated in gold. What does that mean to you and me? The average guy on the street.
I can't predict whether we can keep moving in what I would consider a positive direction that way. But as you say, money is probably the most important asset in anyone's life. It's their money they use for planning. They use it for their savings. They can start businesses with it or fund their education. And so to me, the government owes it to people to let the money be reliable and dependable, and it has to be trustworthy. What I was very impressed, in September 2011, Donald Trump, as a businessman, decided to accept a deposit from a company that wanted to rent space in one of his buildings. He took gold bars in payment, and he didn't do it quietly. He had a press conference because he said, I don't think our policies are protecting the dollar. So I am making a statement. He has said in public that there was something solid about our country when we were linked to gold. And he's probably talking about the 50s and 60s when the U.S. dollar was convertible into gold internationally. And that was part of what kept a stable international monetary system anchored. And he more recently said it would be very difficult to go onto a gold standard, but wouldn't it be wonderful? He said, we'd finally have a standard on which to base our money. So I think his instincts are extremely good. I think he's a realist, and he's correct in saying it would be difficult. But I think there's increasing appreciation for the importance of a stable monetary platform to encourage people to invest for productive ventures, not just trying to take advantage of financial markets, because let's face it, that's where people have been able to make big money, but that doesn't do much to increase the standard of living. It doesn't do much to create more enjoyment for people, real goods and services. It's just financial gains. That's wonderful, but it doesn't help productive workers get rewarded for their efforts.
So once again, we're talking to Dr. Judy Shelton. I met her at the New Orleans Investment Conference, as well as Tom Realwhite, who's Rich Dad Advisor on taxes. What is your opinion of Bitcoin and cyber currencies? How does that fit into this whole equation today?
I think that the popularity of Bitcoin really shows a couple of things. One, people would like to have a currency that can be used anywhere in the world, that is not subject to the exchange rate among currencies. That is, so long as everyone is using the same currency, you don't have to worry about fluctuations in exchange rates. So if everyone was using a common currency, then in a way you would all be using a unit of account that valued goods and services and investment opportunities in a logical, rational way. And that would be very positive. The other thing it reveals is people don't like having the money manipulated by governments and by central banks. They would rather have something with more privacy, with more, let's call it more of a free market money versus being controlled and engineered by a small committee that meets 8 times a year to decide what should be the value of that money. And so it shows there's a hunger out there for an alternative, even to the dollar, which will still remain the world's most dominant and popular currency for transactions. But it's interesting that it's getting some competition.
Any comments, Tom, on for the review of taxes?
I think it's fascinating. I'd like to go on for hours with Dr. Shelton and talk about blockchain technology and how it might be used by the Fed, but maybe another time on that. Certainly the two go hand in hand. It's been fascinating talking to you, Dr. Shelton, so thank you very much.
Oh, and thank you. I agree with you that the technology, and now the Fed wants to get into it. We'll see. I guess that's a sign that they see that people are interested in going that direction.
Well, as a Bob Dylan song sang a long time ago, the times they are changing, and it's changed. So, well, thank you, Dr. Shelton. It was really enjoyable.
And I'm going to recommend people go to your website, Judy, theatlasnetwork.org.
Tom and Robert and Kim, really, really a great pleasure. Thanks for having me on.
Oh, thank you. Well, I'll tell you, we need more sound money principles in this country and in the world. So thank you for what you're doing.
Okay, so Dr. Shelton, thanks very much.
Thank you, Dr.
And
Judy.
give my regards to your husband.
Thank you.
Tell him Semper Fi.
Thanks so much.
Okay, keep up your great work.
Thank you.
So when we come back, we're going to ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Do you own an LLC or LP? Are you aware of the new rules? The IRS has mandated new audit rules that require every LLC operating agreement and LP limited partnership agreement be amended. This dramatic requirement has never before been experienced, and changes must be made by December 31st. Corporate Direct, owned by Rich Dad advisor Garrett Sutton, can guide you through these new rules. Call 800-600-1760. That's 800-600-1760. Or visit corporatedirect.com. Contact Corporate Direct today to stay in IRS compliance.
Robert Kiyosaki's Rich Dad Advisors have a great gift for you. Visit richdadadvisors.com and receive 5 free reports on business and investing success. 5 free reports that can help you right now. And while there, check out the Author's Choice audio series. Audio is a great way to learn. And for as little as 99 cents, you can download key chapters from all the Rich Dad Advisor books. You can listen to The Myths and Magic of Real Estate Investing, 7 Steps to Limited Liability, The 4 Pillars of Investing, Team Code of Honor, or The Psychology of Debt, among other great audios. For pennies, you can power up your skills for getting out of the rat race. So please visit richdadadvisors.com for your 5 free reports and your powerful and affordable audio chapters. That's richdadadvisors.com for great information that can help you right now.
It pays to listen. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And our guest today was Dr. Judy Shelton, and she was on Trump's transition team and his idea of sound money. And our other guest was Tom Wheelwright, who has agreed to stay behind with the Rich Dad Radio Show to answer the Ask Robert questions. But once again, you can listen to all of our programs at richdadradio.com because we archive them, because you can listen to them again and maybe hear something you didn't hear the first time. And you can have your friends, family, and business associates listen to it, and you can discuss it. Because as you know, whether you're rich, poor, or a bank robber, you have an opinion about money. And if you listen to those idiots who are screwed up about money, then you'll be just as screwed up as they are. So that's why we archive it at richdadradio.com and have your friends listen to it, and you'll hear some very wacky ideas about what money is. And once again, you can listen to this Rich Dad Radio program on iTunes or Android on your time and your schedule. And you can submit your questions to Ask Robert at richdadradio.com. Once again, thank you to Dr. Judy Shelton, and Tom Wheelwright has agreed to stay on. So, Melissa, what's the first question?
Our first question today comes from Billy in Lincoln, Nebraska. Favorite book, Rich Dad, Poor Dad. Says the Trump tax revision, if passed, will go against a lot of your teachings on taxes. For example, adding 15% self-employment tax. What's your perspective on his proposed bill?
Okay, the reason I chose that, and I thank him for the question, is this is what I'm talking about. I don't even know what my thing is on taxes because I'm not a tax expert. And most of you are getting tax advice from idiots. And the purpose of having the Rich Dad radio program is you can listen to people who are credible, who are real, who are in the fray. You see, this next book I'm coming out with is called Fake. And the reason most of us are in financial trouble is because we've listened to fake teachers. And what I have spent my life doing is looking for real teachers. And that's why we have Tom Wheelwright on this program, because if I was talking to Dr. Judy Shelton about taxes, I'd be blowing smoke. And so the lesson for all of you who say, I said this, you better listen, clean your ears out. Because I don't talk about taxes unless I talk about it through Tom. Any comment, Kim?
Yeah, it's a really good point that Billy brings up because, okay, so we have Tom on the program. He has a point of view. He's telling Robert and me specifically, this is where you're going to benefit from this tax plan. We have David Stockman. He's very anti a lot of this bill.
And Stockman was on Reagan's budget director.
Yeah.
I mean, it's better than your brother-in-law who's broke.
Yeah, and then you have Dr. Judy Shelton, and she sees a lot of positivity coming out of this tax bill. So everybody's got their point of view, and we want to listen to all the points of view.
So the reason I want you to listen to this program again on richdadradio.com, especially with your brother-in-law, sister-in-law, business partners, kids, and business associates is, look, like it or not, money and taxes are a part of our life. And if you listen to idiots, people will have no idea, especially if they're broke. You know, one of the biggest opinions is that the rich are crooks. Well, that's not my opinion because I'm rich. But there are a lot of crooks out there, and some of them are poor too. So most people sit there in their little ivory towers in their brains with their opinions and saying things I did not say. So, Tom, what do I say about taxes besides talk to Tom?
That's about it. And really what we've been saying for years, and what I've been saying is the tax law is a series of incentives, primarily for business owners and investors. And this bill does not change that. In fact, it goes a step further because it reduces both corporate tax rates and self-employed tax rates. So it encourages real estate. There's some real estate tax benefits in this bill. There's tremendous business tax benefits. This is a business bill. I mean, But
Tom, you
really?
say it another way because tax is such a big subject as money. It's not your income; it's how you earn your income. So if you're an employee
Exactly.
or you're self-employed, you're still getting screwed, right?
Right. No question. If you're an employee and that's how you earn your money, you're still getting screwed, probably even more, actually. And if you are a business owner or a professional investor, you're getting even more tax benefits.
So that's why the Rich Dad Radio Show, we always say to you, we don't say it's not fair. I'm just saying the whole thing is written for the rich, not the poor and middle class. I'm not saying it's fair. I'm saying you'd better pay attention because if you think that anybody cares about your little nest egg, I think you're crazy. And if you don't put words in my mouth, I tell you, that really upsets me because I always say, when it comes to taxes, ask Tom because I don't know anything. And when Tom tells me, I need to change something, I change. Some of you want to argue with Tom. What a waste of time that is. Next question.
So let me just add, Tom. So, Tom, what's your website so people can learn more about all of this? What's your website?
TaxFreeWealthAdvisor.com is the website to go to, TaxFreeWealthAdvisor.com.
And the problem with that is one of the criticisms you and I get is we say, well, we can't do anything about it. Yeah, you can't do anything about it because you went to school, you have a job, you're an employee, or you're a doctor and a lawyer, you're self-employed, you're a high-income person. But if you don't change how you earn your income, you're still going to get screwed because the whole system is written for the rich. Next question, Melissa.
Our next question comes from Jeff in West Richland, Washington. Favorite book, Rich Dad Guide to Investing. It says, I believe the U.S. economy is headed for a big crash because of low interest rates as well as an enormous expansion of the money supply. What do you believe are the top 2 or 3 safe haven investments by which people can protect and capitalize on the coming downturn?
Well, first of all, we don't give investment advice and we don't sell investment advice, nor do we sell investments. We tell you what we do. The problem here is this. Most people can hear what we do. They can't do what we do. And a big part of it is because most people have been trained to be employees, go to school and get a job and be passive investors. Save money, invest in the stock market. If you don't change that mindset, there's nothing you can do, because the problem isn't the economy or the crash. The problem is you. Any comments, Kim?
Yeah, well, you talk about real teachers, and we also talk about real assets. So, we're not in the stock market. We don't play the stock market. We don't like that game, but we do like real estate.
But you should be if you want to.
If you like it, if it's your thing, and we have some friends that are very, very successful at it.
Buffett made a lot of money in the stock market, but he buys businesses.
Yes, he buys businesses, not stock. But we like the real assets. Real estate is real. Gold is real. That's
but
what we do. But
most people should not do what we do because they can't do it.
Not without the
Any
education and
that,
the experience.
Tom?
I happen to be a big believer in do what you know. I mean, get educated, do something you really know. That's always the safest investment, is do something you know.
Yeah, you're like a dog. Here, Fido, sit. Bark, Fido. Roll over, Fido. If that's what you want to be, invest in the stock market, invest in mutual funds, ETFs, and bark when told to bark. Next question, Melissa.
Our next question comes from Eric in Indiana. Favorite book, Cash Flow Quadrant. How often do you review your tax strategy, and how often should you change strategies?
Hey, Tom, when was the last time you and I talked about taxes? Was it 20 minutes ago?
Yeah, exactly. I was going to say yesterday, but you're right. It was on this show.
And again, I want to give you one of the most important things that Tom has taught Kim and I and millions of other people. It's not money or it's not income. It's how you earn your money. If you're employed and an employee, Tom cannot help you. Tax planning will not work. If you're a doctor, lawyer, real estate agent, massage therapist, it probably can't help you much either. But if you're a professional investor and an entrepreneur who has employees, Tom can help you a lot. So it's not the tax planning, it's actually what you do for your money planning. Like if Tom told me tomorrow to raise puppies and I could get $1 million tax break,
that'd be so
puppies.
fun.
There'd be puppies.
I would love that.
Tom, isn't that? It's not money or income; it's how you earn your money, right? Is that correct?
No questions. Well, the first thing we tell a new client actually is, first question we ask is, how are you investing your money? Because how you invest your money, how you earn your money, determines everything about your tax planning. I mean, it doesn't mean you shouldn't do tax planning. It just means that it has a huge impact depending on how you invest your money. How do you make your money?
So once again, it's Robert Kiyosaki, the Rich Dad Radio Show. I want to talk Tom Wheelwright, Rich Dad Advisor. His book is called Tax-Free Wealth. Read it.
By the way, this question was, when will you publish a tax strategy publication? This is from Eric. Tax-Free Wealth by Tom Wheelwright.
How long has that book been out, Tom?
5 years.
5 years.
Tax-Free Wealth.
Other guest is Dr. Judy Shelton. Again, like if she's a postdoctoral candidate or student at Stanford University, she's Trump's advisory board, I would listen to her, not your brother-in-law. So once again, I thank you for your questions. Submit them to richdadradio.com. Thank you for listening to this program.